Let us now do a quick revision of construction contracts under accounting standard 7. This construction contract is not applicable for own construction of a building. It is only applicable for a service contract where you got the contract to construct a specific asset or a combination of assets. We can call them combination of assets when they are connected by way of design, technology or function. Then we can call it as one single contract. This construction contract, you can treat them as separate contracts or one single contract depending upon negotiation, revenue and cost and profit. If the contracts are negotiated separately or can be negotiated separately, if the revenue and cost for the contracts can be identified separately and the profits also can be determined separately, then we have to treat them as separate contracts. If we cannot negotiate them separately, if the revenue and cost for the contract cannot be identified separately, if the profit has to be identified only in total and cannot be identified separately, then it will be treated as one single contract. This will be considered as one single contract because they are interconnected by way of design, technology or function. Get that? Very good. Then we see the contracts based on the revenue can be classified into two types. One is fixed price contract. Second one is cost plus contract. Under the fixed price contract, the customer has promised to pay a fixed sum to the contractor, and this will be the sum that will be paid for construction of the building or construction of flyover, tunnel or whatever it is. However, under cost plus contract, the consideration is not fixed. After the cost has been incurred by the contractor, a fixed percentage of it will be given towards profit, and that sums up to become contract revenue. However, though we use the word fixed price contract, the contractee can promise the contractor for an escalation clause, meaning the contractor will be eligible for a certain percentage of increase in the contract revenue for increase in the contract cost by a certain percentage. I hope you got this. How do we recognize the revenue with regard to construction contract? That is what the entire standard is about. Though the name of the standard is construction contracts, we can very easily say that it is revenue recognition for construction contracts. Majority of the standard is with the base of accounting standard 9. We can recognize the revenue only on fulfillment of two important conditions. One, reliably you are able to measure the revenue. Two, there is a probability that you will complete the project and then take the revenue. Only if these two are satisfied, we'll go ahead and then learn how to recognize the revenue. If one of these two is not satisfied, then we will not recognize the revenue. We'll wait for actual completion of the contract and then recognize the entire revenue. Got that? Now, construction being done over more than one accounting period, we cannot recognize the entire income in any of this. We cannot recognize it in the first year, last year, or not even in the middle year. So when the construction happens over 3 or 4 accounting periods or even longer, revenue also should be recognized over 3 or 4 accounting periods because expenditure is also incurred over 3 or 4 accounting periods. Do you get this? How do we recognize this? This is done based on percentage completion method. What is this done based on? Percentage. Very good. Where is our percentage completion? Here. Percentage completion method. So this percentage is computed under 4 methods as per the standard. There is surveyor method, cost incurred to total cost method, percentage of work certified method, and physical inspection method. But however, in our chapter, when we do questions, we're going to refer to only these two. One, surveyor method. Second one, cost incurred to total cost. Surveyor is where an external expert is appointed. This external expert will survey the entire construction site and will tell this much percentage of the construction is complete. Under cost incurred to total cost method, cost incurred is actual. We know how much cost is incurred. Total cost is cost incurred plus cost expected to be incurred. When we add both, we get total cost. So we'll take cost incurred divided by total cost, that is cost incurred plus to be incurred. That will give me percentage of completion of the contract. This is one way of computing the percentage. This percentage is important because out of the total revenue, I'll apply this percentage to identify how much revenue should be recognized in the current period. Now talking about contract revenue, what and all is included in contract revenue? Contract revenue will include such amount what we have promised, what we've been promised in the contract. Other than that, we will be including CVI and excluding P to identify our contract revenue. So contract revenue is the amount entered into by way of signing in the contract plus CVI minus P. C, claims. If in case at the end of the contract, if we take over any of the asset which doesn't belong to us, which belongs to the customer, but we take it over, it is like non-cash consideration taken from the customer. If it is not initially included in the contract revenue, we should add this amount. Next one, variation. Variation is any change in the scope. If in case there is deviation from the existing contract agreement, we go slightly ahead, build one more floor, build a little more extra construction, build an extra wall, build an extra kilometer of road. If we do any of these, For this variation from the existing contract, customer might compensate us by extra payment. That is variation. Incentive is what we get for faster completion of the project, or permission for completion on time, or for better quality than what we promised. If we make the customer happy with our project, then they'll keep us happy by giving us additional consideration, that is incentive. And last one is penalty. For any deviation from the project, for any misconduct, for any nuisance that we create, for any delay, if the customer has to face any adversity, we compensate them by paying penalty. This will be deducted from our contract revenue. Any of these has to be included in the contract revenue only if you have a right to receive it. That is, reliably you can measure it and there is probability that you will get it. Let's say there is some reward that if you finish the contract within 2 years, you will get 2 lakh rupees extra. At the beginning of the contract, we cannot include that 2 lakh. Even if I say that it is my past track record that every year, every contract I have finished in time, you cannot include. Why? There is no right to receive. You should prove, should start the contract, you should complete the contract. Only when you have right to receive such money, you should include it in the revenue. Are you getting it? Any change in this revenue that happens, or any change in the expected cost that happens, is change in accounting estimate. It will not be change in accounting policy, or it will not be considered as prior period item as per AS5. Then, once this contract revenue is computed, we need to also identify how to recognize contract expense. Contract expense will include 3 important things: direct cost that is incurred for that project, allocable cost which is incurred for several contracts together, but it can be allocated to this construction also, any other cost which is related to this product. It does not include 3 things: administrative cost, selling and distribution overhead, or any other pre-construction cost. If there is any expenditure incurred for securing the contract, it will be included as per para 20. We cannot consider it as pre-construction cost. It can be included in the contract cost. However, to take it, it should be specifically identifiable. It should be measurable reliably. There is a probability that this contract will be obtained because of this expense. Only when this IMP is fulfilled, then you will include this cost incurred to secure the contract in contract expense. Contract expense, usually we would know how much is incurred during the year. And contract revenue, we would not. How? Contract revenue will be available to us in the total. When the contract revenue is available to us in the total, we will multiply this contract revenue which is in total with percentage that we have completed. We will identify the extent to which it should be recognized. From this, we will deduct the revenue which is already recognized. If it is year 1, there is 0 revenue recognized previously, entire revenue is current year income. If it is year 2, then the revenue recognized in the previous year will be deducted from this to arrive at revenue to be recognized in the current year. This revenue to be recognized in the current year is like sales made in the current year. Similarly, we'll do it for cost also. What is the total contract expense multiplied by percentage of completion will give us how much is the contract expense for the period. Contract expense till the date. From that, if we deduct the recognized expenditure already recognized, we'll get the expense to be recognized. This you don't have to do in all the cases. In several questions, they'll give expense for the period. However, there are certain questions that we did where they'll give you contract expense and they'll give you profit or loss. They'll give you contract revenue and they'll give you profit or loss. Contract revenue minus profit will be contract expense, or contract revenue plus loss will be contract expense. That will be total contract expense. You multiply by percentage to find contract expense till date. From that, we'll deduct what is already incurred. We'll get contract expense incurred during the period. This contract revenue to be recognized during the period and this contract expense to be recognized during the period, if we take these in either side of our contract PL, revenue on the credit, expense on the debit, and deduct them, we get the contract profit to be recognized during the period based on percentage completion method. You get that? However, if at any point of time during the contract, if total contract cost exceeds total contract revenue, we cannot recognize only percentage of loss. We have to recognize full loss. Sir, but contract is only 10% complete. Loss is 10 lakh. 10 lakh only 10%. 1 lakh would have been recognized by PCM. Balance 9 lakh of loss will be recognized usually on completion of balance 90%. However, by way of conservatism as well as para 35 of accounting standard 7, we need to recognize that balance 9 lakh of loss also in the current period only. Sir, but construction is only 10% complete. Balance 90% will be recognized based on provision. We'll create provision and then record it. So, whenever total contract cost exceeds total contract revenue, entire loss should be provided for by way of provision, irrespective of whether the contract is started or not, stage of completion, and profit from other contracts. Everyone understood this? Then this is very rare. Sometimes they do ask this. Though the standard is about revenue recognition, they might ask you to compute how much is the asset or liability in the specific contract. Then what do? We'll basically take our expense that we have incurred. To this we add profit, because profit is recoverable from customer. If there is loss, we deduct it. If we add profit, deduct loss, this is the amount that we should bill to the customer. If customer has, we've billed the same amount and they paid some amount, from the expense plus profit minus loss, that is the amount to be billed, we deduct the progressive payment received from the customer. If the resulting amount is positive, that is asset, we have received excess, we are supposed to receive. If the amount is liability, it will be negative, means we've collected more money than what we should collect. I repeat, to expense we add profit, we deduct loss. When we add expense, when we add profit, deduct loss, then whatever results is the amount to be collected. We deduct the amount collected. If the resulting amount is positive, this is the amount to be collected, our asset, receivable. If in case we have collected more, then the amount will be liability, that will be negative. And there can be certain times difference between the amount to billed and amount to be billed, that will be retention. That is expense plus profit minus loss is not the amount billed. Then take that amount billed and this progressive payment to compute asset liability. Amount to be billed and amount billed difference will be retention. And lastly, what you should notice, whenever there is change in contract cost or revenue because of the agreed terms, that will be change in accounting estimate and we will be giving it prospective effect. This is quick revision of accounting standard 7. I hope you understood whatever we just discussed. So this sums up the entire AS7 if you observe here. This is it. Got it?